This is the luxury world. Get inspired with us today and tomorrow. The previously booming world of luxury watch collecting has shifted gears. The era of skyrocketing prices and legendary waitlists for certain Rolex models is over. You probably already know that the watch market and brands are struggling. Watches are not selling like they did in 2020. However, the situation is worse than you might think. The watch market is in much worse shape than you realize because it is really bad. Tudor is practically dead. Patek Philippe is hit or miss, and Rolex, they are nowhere near as desirable as people think, as it is quite the opposite. In this video brought to you by the Luxury World, we will explore the current state of the market, analyzing trends for brands like Rolex, Tudor, and Patek Philippe. We will also investigate whether the bubble has truly burst, what opportunities exist for buyers, and the potential future direction of the luxury watch market. If you have not subscribed to our channel, we encourage you to do so to stay updated on our future videos. By now, it is clear that the watch market is in a downturn, and luxury watchmakers are facing challenges. Richemont, LVMH, and Swatch Group all had subpar performances in 2023. People are buying fewer watches, leading to longer periods of unsold inventory. This problem is exacerbated by watch producers having overordered parts, materials, and components last year, resulting in excess inventory. For instance, Tudor sold fewer watches last year than in 2021, and Omega's sales volume has remained flat since 2021. While some of this is due to a strategy of selling fewer watches at higher prices, these brands are not happy with stagnating or declining sales volumes. Additionally, several component manufacturers have had to reduce workers' hours or send them home due to a lack of orders. Some manufacturers are even shutting down production early for the summer because there is no work. As consumers, there might be a sense of satisfaction towards these luxury brands due to their predatory pricing in recent years, but the downturn is having real consequences for regular workers. From a secondary market perspective, compared to 2021, the overall market index for secondary prices is only 6% higher. While this is an increase, 6% over 3 years is nearly disastrous. The watch market looks terrible from this perspective, and it is even worse for manufacturers. If secondary market prices are down, it implies that retail inventory is not moving off the shelves. Considering the annual inflation rate has been between 4.5% and 8% since 2021, and the secondary market has only increased by an average of 2% per year, these brands are potentially making much less profit at the retail level. This also impacts on the overall growth of the secondary market, with some manufacturers possibly losing money. It is likely not the best time to start as a new gray market watch dealer, depending on the watches you trade. This is shocking news for watch brands and for us as enthusiasts. Watches and Wonders 2024 was proof of this downturn. Many brands played it safe, releasing a few new models. Rolex was very restrained, Tudor kept it simple, and Omega, although not participating in Watches and Wonders, only introduced a wide Speedmaster. The story so far is one of iterations and safe bets, with few innovations or innovative ideas. It is not a wonderful time for brands, and it is not overly exciting for us either, although we do appreciate the discounts. Now let us talk about Rolex. Rolex watches do not behave quite like Tudor or Patek Philippe. Tudor saw a bump in all models due to their overall popularity as a hype brand. Patek Philippe had significant bumps for some models and less for others. Rolex, however, shows a different trend across its models. Except for perhaps the full gold GMT Master 2 with a gray and black bezel, most Rolex models go up to a certain level and then more or less stay there with only a slight decline over time. The difference between their highest points and their current points is the smallest of the three brands. This is likely because the popularity of Rolex watches is easier to predict before release. We know how popular the Daytona or a two-tone Submariner will be. Rolex's demand prediction is more consistent, resulting in less of a bump. What is interesting about Rolex is that the steel models of the GMT Masters and Daytonas are the ones that go high. The two-tone models do not trade as high, and watches at the fringes of their catalog, like the Explorer 2s and the 1908s, do not do as well. This should not be surprising, as most of us intuitively know this. Rolex is desirable, but it is the perennial favorites that command a premium, not just because it is a Rolex. The data supports this conclusion. Surprisingly, Rolex is at index 98, slightly worse than they were in 2021 in terms of desirability. They are also performing worse than the market average, which was up 6% for the period. This is unexpected, as most people would have assumed that Rolex was at least performing better than the general market trend. However, the data shows that while Rolex is popular, the idea that anything Rolex holds its value is only partially accurate when you factor in the high volume of Datejust and Oyster Perpetual models sold. If you managed to get your direct every Rolex model released from 2021, you would theoretically be in the money now. However, this would be largely driven by the Yachtmaster in titanium and the Daytonas, with the rest being mediocre at best. This assumes you got these watches at retail prices and maintained them in perfect condition, which is no small feat. Anything bought at secondary market prices upon release would have resulted in a loss by now. In contrast, Patek Philippe produces fewer than 70,000 watches a year. Their highly limited, highly desirable models keep demand high, resulting in a 26% overall market increase. These heavy hitters support Patek Philippe's overall performance. Rolex, with its 1.2 million watches, cannot rely on models like the titanium Yachtmaster to compensate for the lack of interest in many Datejust, Oyster Perpetual, and two-tone Submariner variants. Rolex's sheer volume makes it difficult to maintain desirability and long-term value retention on average. According to the data gathered online, the hype around Tudor watches has diminished. At one point, Tudor attracted so much attention that including Tudor in a video thumbnail was more effective than using Rolex. This means that innovative, non-limited releases will become fewer and further between. With a solid lineup including the Pelagos, FXT, and Black Bay models, they do not need to add much to their catalog. Safe updates like a monochrome Black Bay 41 that is a minor improvement on the previous version will become the norm. Whenever a new model is released, there is always a short-term price bump, or the don't buy hump that is caused by initial hype, flippers, and gray market dealers trying to cash in before full production ramps up. This price bump drops off for every Tudor watch released, even those before the market peak in 2022, and continues to decline. No Tudor watch has increased in value since its initial release bump. Currently, no Tudor model released in the last 3 years is trading above retail. Overall, secondary market prices for Tudor watches are 15% below where they were in 2021. This data indicates that Tudor watches generally do not hold their value, and their desirability, as shown by these numbers, has declined over the past 3 years. The initial price bump for new Tudor models barely puts them above retail now, and over time, they all trade below retail. Now, we have Patek Philippe, showing a similar but also different trend. Like Tudor, Patek models also experience a price bump post-release, but not all of them see significant increases. For example, models like the 2 Calatrava and the 5224 have notable bumps, but generally, the highest prices are seen shortly after release, followed by a decline. This trend is consistent with the overall market decline. However, not every Patek model trades above retail initially. The 6119G, for instance, has traded below retail since its launch, as have the 5905 and 6007G. Out of 15 releases in 3 years, only 4 are trading more than 10% above retail. Broadly speaking, Patek models are hit or miss in terms of popularity. These models are holding up Patek Philippe, while the rest of their inventory is comparatively mediocre. This suggests that it is not the brand as a whole, but specific watches that are in demand. Thus, Patek Philippe might not be the powerhouse in terms of overall numbers that many people believe. What are your thoughts on the watch market update we discussed in this video? If you found it enjoyable, please consider leaving a comment and giving it a thumbs up. Do not forget to subscribe to our channel for future updates and more content. Thank you for tuning into the luxury world, and we eagerly anticipate your presence in our upcoming videos.